Yo, what is up, guys? In this video, I'm going to be talking about something that you probably haven't heard about, but it's really important in sports betting. It's called confidence, and it's hard to distill into like a number. However, I learned this about confidence when I was a quantitative trader. I started my career as a trader, and one thing they taught you at Susquehanna, which is the trading firm that I worked at, is you really need to think about confidence. How confident are you that when you're trading, you're actually getting an edge on this specific trade? How confident are you that buying at this specific price is actually a good decision? Confidence, confidence, confidence. And again, there's a lot of things that kind of impact how confident are you that you're getting an edge on this specific bet, but I'm gonna try to explain it as best as possible. I think about this all the time when I'm betting on sports, and sports betting is very similar to trading, right? So if you're looking for a video about, hey, here's how you can find locks, guaranteed winners, like that's not the point of this video. The point of this video is to get nitty gritty into trading, its relationship to sports betting, and how you can use trading strategies that, literally people at the top trading firms, top investment banks, these are things they're thinking about with every trade they make. And in a similar way, every bet you make, you should be thinking about these same exact things. So let's start out with the most basic example of confidence in sports betting. So the best way to literally guarantee, right, that your bet has an edge is to find crossed markets or arbitrage opportunities. So arbitrage is a financial term. I learned about it when I was working in trading. And I'll give you a simple example. I mean, it's not like this is possible, but it's an example. Let's say on one crypto exchange, you could buy Bitcoin for $100,000. On another random Bitcoin exchange, you can sell Bitcoin for $105,000. That's arbitrage, right? I could buy for $100,000, sell at $105,000, and I would make $5,000 risk-free profit because of the discrepancy in prices between the two exchanges. Obviously, this is never going to happen. Bitcoin's, markets are way too liquid at this point. It's an example. One of those two trades, right, by definition, has to be profitable. If you can buy at $100,000 and sell at $105,000, one of those two trades has to be profitable, either buying at $100 or selling at $105. Because again, you could do both to make $5,000 risk-free. So one of those two trades is profitable. It's the same thing in sports betting. So in sports betting, every sports book sets their own odds. So arbitrage, which is a great strategy, but the point of this video is to talk about getting an edge on individual bets, not making risk-free profits with arbitrage. It's not the point of this video. But here's a simple example, right? Today I locked in Austin Wells to hit a home run at plus 750. So you'll see that FanDuel was arbitrage to NoVig. These two books had such different prices, such different odds, that I could bet on Wells to go yard on FanDuel at plus 750. I could bet on him to not go yard at minus 706 on NoVig, and I would make a risk-free profit. I could place both of those bets to guarantee a return of risk-free profit. So long story short, one of those two bets by definition has to be profitable. Either is over at plus 750 or is under at minus 706. One of those two bets has to be a profitable bet because I can bet both of them and guarantee a profit. So basically, you'll see on NoVig, there was 7.1K in liquidity on the under. In other words, someone is saying you can bet up to $7,100 on this under, on Austin Wells' under at minus 706 odds. So basically, if I took out this full arbitrage bet, I'd be able to make $52 in risk-free profit. But that's also a lot of money, right? So somebody clearly has a strong opinion. So to get to the point, 7.1K in liquidity is no joke. If somebody is offering 7.1K, right, on Austin Wells to go under at minus 106, that means that person is trying to take the opposite position. NoVig is a peer-to-peer betting exchange. There's no limits. So basically, if someone's offering 7.1K on Wells to go under, they're trying to take the opposite position, which is Wells to hit a home run for over $1,000 at plus 706 odds. And on FanDuel, we're able to get an even better price, plus 750. So these peer-to-peer betting exchanges attract a lot of sharper bettors, market makers, syndicates, because again, they're peer-to-peer, so there's no limits, nothing like that. You can get down as much action as you want. So if there's a lot of liquidity on the under, right? Someone's trying to take the opposing position, which is Wells' home run at plus 706. It's most likely a sharp bettor, a syndicate, who's trying to get Wells at plus 706 for a big position, and we're able to get plus 750 on FanDuel. That's a no-brainer. And again, we could just arbitrage bet this to guarantee a risk-free profit, but in this example, I just took Wells to go over for the max I was allowed on FanDuel. So this is how I find a lot of my bets. Here's another play I gave out completely for free. Caruso over 1.5 steals in game 1 of the Thunder game at plus 126 odds. FanDuel is arbitrage to NoVig and ProfitX, so by definition, one of the two bets, either is over at plus 126 or is under at minus 122, has to be profitable. Sorry, and basically there's a lot of liquidity once again, so it's almost certainly a sharper bettor, a syndicate trying to load up on a big position. So I ran the over, Caruso over 1.5 steals at plus 126 in my parlay. Same thing right here with George Springer. I took Springer home run, a fair amount of liquidity, crossed market. We know one of the two bets has to be plus EV or profitable, so I ran the FanDuel side. These betting exchanges are pretty sharp. So long story short, I use the arbitrage tool. I look for crossed markets. That's how I start. That's how I find most of my bets. Because again, if the market's crossed, we have extremely high confidence in the edge on our play because we know one of the two bets by definition has to be profitable. If there's an arbitrage opportunity, either the over or the under has to be profitable because you could bet both to guarantee a profit. And if you think about it, it kind of makes sense. It's the same thing. It was the same thing when I was a quant trader. If there's some hedge fund that is notorious for making a ton of money who loads up on a specific derivative like a call, if someone buys, some big hedge fund or something, if they're buying millions and millions of dollars of some obscure call option for $5 and I'm able to buy a little bit at $5 as well, hey, they're pretty smart, so I'm going to follow the smart money. And it's really important in trading to kind of understand liquidity, understand, kind of following money, and because information is presented in markets, not only in sports betting, but also in trading. So when I was a quantitative trader, I'm constantly looking at what other trades are happening in the market, especially big trades from smart people, because that's helpful information when I'm making my own decisions. So for example, if somebody buys a ton of call options on Facebook and it's, somebody that's flagged to be a big hedge fund, they're pretty smart, they're known to beat the market. If they're buying a ton of call options on Facebook, I'm a lot less likely to go buy puts on Facebook. So a put is just like an option, a bet on the stock to go down. A call is a bet on the stock to go up. So if someone really smart is loading up on calls on Facebook, I'm going to be less likely, more hesitant to short Facebook or buy the opposite position, buy puts on Facebook. So anyways, there's meaning in markets, I guess is the first thing. In crossed markets, understanding liquidity is super valuable. So I'll give you a simple example of just kind of how I use this tool. So this is the OddsJam arbitrage tool. You can see I just bet the Rockies at plus 250 on Fliff. It seems like relatively good value relative to the other books, but it's also arbitrage. It's also a crossed market with NoVig, and there's 17, it may be a little hard to see. Maybe I can zoom in a little. And it's still a little hard to see. It says that there's 17.6K in liquidity right? 17.6K in liquidity on NoVig. So I just bet the Rockies for $1,000. I could go over to NoVig, bet 2.5K approximately on the Phillies, guarantee a risk-free profit of $14.49. The Rockies are a notoriously bad team. But long story short, I mean, clearly somebody is trying to get, they're offering over almost $20,000 on the Phillies at minus 245. So somebody's trying to take a massive position on Rockies money line at plus 245, and we're able to get plus 250 on Fliff. Better odds than this clearly sharp, profitable bettor trying to take a massive position on the Rockies at plus 250. We're able to get a better price. This sharp bettor is trying to get Phillies, they're offering Phillies at minus 245 for 17.6K. So they're trying to get, like $6,000 of Rockies plus 245. So long story short, I have pretty high confidence in this bet. And I can refresh. Is it still there? Wow, it's still available. So some of these plays, right, if the liquidity is lower, so in this example, here we have 17.6K. Here, here's an arbitrage opportunity. There's only $169 being offered on the Timberwolves at plus 258. So it's not like a massive position like this previous one. But regardless, if you wanted to bet on the on the Thunder at minus 255 on Fliff, seems like decent value. These other books have this around minus 280. And again, it's an arbitrage opportunity, although there's only $169 in liquidity. So you could only arbitrage bet this to make $1 profit, if you wanted to take out the existing liquidity. But anyways, that's kind of how I use the arbitrage tool. Is, always one of the two bets has to be profitable. Nebraska plus 1.5, right? Or at minus 122 odds, or Michigan State minus 1.5 at plus 128. Again, I could bet both of these outcomes to make a risk-free profit. So we know one of these two bets has to be profitable. In this case, I think I'm going to run the FanDuel side. So let me just log into FanDuel. We might as well get a bet locked in on stream if I can. So I'm going to run the FanDuel side. BetOnline is known to be a sharper sports book, especially for college sports and especially for mainline markets. So I'm just going to take the FanDuel side here at minus 122. Other books have this priced around minus 150. So that's another play I have high confidence in my edge as a sports bettor. So first tip was focused on crossed markets. I mean, that is the definition of having really high confidence in your edge that you're getting a profitable bet. But my second tip is focus on tight markets. And I understand this can be a little confusing, but I'll give you an example. Is if we look here, Flores to hit a home run at plus 830 on FanDuel, it seems like pretty decent value. FanDuel's offering the best price. Circa, which is a pretty sharp book, they're only at plus 725, but the markets are so wide. So not to pick on Fliff, but if you look at Fliff, their market is plus 495 minus 1,025. That's kind of like if someone tells you, hey man, if you're looking to sell your house, let's say, and someone tells you your house is worth between $495K and $1 million, in 25K. It's like, that wasn't really helpful. You just gave me an extremely wide range. If someone comes to me saying they'll buy my house for $600,000, is that a good deal? Is that a bad deal? You don't really know because the range is so wide. And it's the same thing in sports betting. So if you take the opposite, right? If someone tells you, hey, your house is worth between $530,000 and $550,000, and someone comes to you and says, hey, I like your house, I'll buy it for $600,000, it's like, yeah, done deal, no brainer. So focus on tight markets. In general, mainline markets like money lines are much tighter. So I'll give you an example from the Timberwolves game actually tonight, is if you take a look at the odds, They're pretty tight. I mean, relatively tight. Like you can see here on Pinnacle, their market, Pinnacle's known to be a pretty sharp book, is plus 243, minus 281. So they have 38-cent spread baked into the market with $30,000 betting limits. $30,000 betting limits, right? So you could bet $30,000 at these prices. Long story short, if you could get the Timberwolves at plus 300, that seems pretty good, considering, again, the Thunder at minus 281, you could bet $30,000 on. So it's a pretty tight market, so you kind of know, okay, the Timberwolves, they're somewhere between, plus 243 and plus 281. That's kind of where you don't know. But if you could get the Wolves at plus 300, that's a no-brainer. It would be arbitrage to a ton of sports books, which we just discussed. And, similarly, if you could get the Thunder at minus 220, that would be a great deal. That would be arbitrage to tons of books. So focus on tight markets with high betting limits. You can see Pinnacle has 30K betting limits, so they're really confident in the prices that they're offering, especially for mainline markets. These are active betting markets that get a lot of volume. Anyways, the whole point, focus on tighter markets. I'll kind of show you how to do that. So here you can see the OddsJam positive EV tool. All this is going to do is scan the sports books and point out line discrepancies, right? So you can see Jamie Benn to record an assist plus 480. FanDuel's offering the best odds in the market. Plus 321 is the average price across hundreds of sports books, the hundreds of different data points in the market, sports books. But if you look at Pinnacle's market, it's like, yeah, we're getting pretty good value to Pinnacle, but this is a 235-cent wide market, right? So what I recommend doing, especially if you're new to sports betting, is just set your market width. A lot of people will set it at 50, right? You want to see tight markets. So depending on how aggressive you want to be, some people will set it at 100. This is just the OddsJam positive EV tool. Some people even get more aggressive and say, no, I want really, really, really tight markets where I'm very confident in my edge, and we'll set it even lower to something like, 25 cents. And you can kind of see here, it's like, okay, we're getting plus 124. These are very tight markets. Plus 119, minus 135. Like, maybe that's a bet you want to go with. So regardless, just kind of lower your market width, and that'll give you higher confidence. So my third tip is use promos to your advantage. So for example, today, all these sports books run promos. They know that these promos are profitable, but they're running them as a marketing cost, right? FanDuel's competing with DraftKings, Prize Picks, all these other sports books to try to get people in the door. So all these books run promos, discounts, stuff like that. So long story short, when I started sports betting, I would basically, just play promos, these 50% profit boosts, these no-brainer discounts on Prize Picks. That's the low-hanging fruit, the easiest money you're going to make in sports betting. It's already hard enough. 97% of sports bettors lose money long-term. It's already hard enough to beat FanDuel. So you might as well take advantage. If you use a bunch of different books, you can just take advantage, pick off the really profitable promos that books are offering, run those, and that's a surefire way to increase the confidence in your edge. If you're getting a 50% profit boost, basically whatever you bet is going to be plus EV. So as a simple example of how amazing promos are, today FanDuel, they're offering a 50% MLB profit boost. So depending on where you're located, kind of stuff like that, how much you can actually bet on these promos will vary. But regardless, if I go here to the OddsJam positive EV tool and I just, let's say, look for home run bets, this promo has to be on home run bet, you're getting 50% improvement in the odds. So right now, Doyle plus 600, this is the top play off of the OddsJam positive EV tool. It looks like pretty good value at plus 600. But again, these are decently wide markets. This isn't crossed. It's not arbitrage. But when you throw in the 50% boost that you're getting on FanDuel, you're going to go from getting plus 600 to plus 900, right? At plus 900, this promo is a no-brainer. I mean, first of all, no other books offering above plus 543, so getting plus 900 seems incredible. But second of all, at plus 900, you could arbitrage bet this, with NoVig to guarantee a profit. So again, one of these two bets has to be profitable by definition. So if I just pull up an arbitrage calculator, so if we were getting Doyle plus 900, NoVig, there's plenty of liquidity, 2.7K in liquidity at minus 614. So 614. And let's say this FanDuel promo you can bet $50 on. So basically, I have two options. I could just run Doyle straight up at plus 900, or I could go over to NoVig. I could put the promo on FanDuel, bet $50 on Doyle at plus 900. Then just following an arbitrage calculator, I could hedge, bet his under on NoVig, where again, there's plenty of liquidity at minus 614. I could bet his under for $429.97, and I will make a risk-free profit of $20. So you're using these promos to increase the confidence, increase the edge in your bet. And again, they're super profitable promos on all these books. So for example, on Prize Picks, let's actually see, do they have any discounts available right now? They do. So they have Yamamoto discounted to 3.5 strikeouts. Prize Picks is usually setting these lines to be roughly 50-50. So for example, the way that Prize Picks works is you take a player to go over or under, you get the same payout regardless. So Prize Picks is discounting Yamamoto by 2 full strikeouts from 5.5 to 3.5. They're setting these lines usually to be roughly 50-50. But if I just go here to the Dodgers game, what I can do is I can go to pitcher props, alternate strikeouts. So what was the line on Prize Picks again? Right here, we have Yamamoto over 3.5 Ks. That's the discount. This discount is a minus 770 favorite. So FanDuel has this at minus 770 odds, right? A huge favorite. So this discount is very likely to cash, right? A minus 770 favorite means it's 88.5% to win. This Prize Picks Taco Tuesday discount, right? Sportsbook odds mean something. If a team is, if this were only minus 200, a 2-to-1 betting favorite, it would be 2/3 to win, 66.7%. Minus 300, a 3-to-1 favorite, 75% to win. Minus 400, a 4-to-1 favorite, 80% to win. So long story short, all these books, Prize Picks, FanDuel, they all run these promos to stand out. It's the easiest money you're going to make. When I started sports betting and had a small bankroll and I didn't really want to lose money, I wanted to be super confident in all the plays I was betting on. I basically just bet the promos at first when I started EV betting. So my final tip for increasing the confidence of your bets is focus on main leagues. I mean, no disrespect to whoever plays in the Chiba Lotta Marines team, but I mean, these betting markets, they don't get much action, right? So these sports books are throwing up odds, and you should have less confidence in your edge because they're just less active betting markets. On the contrary, if someone comes to me and says, hey, I don't want my Amazon stock anymore, I'll sell it to you for $190. I would do that in a heartbeat with my entire net worth. Like, no brainer, right? There are literally millions of shares of Amazon stock traded every day. There are hundreds of thousands of investors, quants, modelers, researchers who study. All they're doing is Amazon, a buy or a sell at, $204. And this is the price where supply and demand meet, 204. Super liquid, super active, tons of eyes on it. So if I could buy Amazon at $190, I would do it in a heartbeat. If I could sell Amazon at $220, I would do it in a heartbeat as well. Anyways, you kind of get the point. Super active, liquid betting market. Compare that to Chiba Lotta Marines. This game may only have $1,000 total bet on it. It's such a random game. No one's really betting on it. So long story short, what I recommend doing is filter out the really weird sports. I mean, again, like for basketball, I basically just bet on the WNBA, which is even questionable on its own, but the WNBA, the NBA, and EuroLeague I'll occasionally do. That's pretty big in Europe. In college basketball, like, you don't want to bet on these weird niche leagues. You want to bet on, you obviously want to bet on sports where the sports books have tons of betting volume to train their models, very accurate lines, liquid, efficient betting markets like the NBA, player rebounds. So I filter out personally all the weird niche leagues as well as weird niche markets. So like, for example, second inning run line. I'm never betting on this. Nobody bets on second inning run lines in the MLB. They're not super active betting markets. So I guess the whole point of what I'm saying is if you could get a bet on, where did that weird baseball bet go? Or I may have filtered it out. Anyways, whatever. If I could get a bet on the NBA or the WNBA and they have the same edge, they have the same profit margin, I'm going to take the NBA bet every single day of the week over the WNBA bet. Because again, NBA is much more bet on. These sports books, take a lot more betting volume, so their lines are more accurate. And yeah, I think that's really important. Like for the NBA on Julius Randle, there's probably been millions of dollars bet on game 1 for the NBA conference finals. You can see these books are constantly adjusting their odds, their lines based on lineup news, sharp action. Like these sports books, you can see here, this is a line movement chart. They're constantly ticking their odds around based on where action's coming in, especially from sharp, profitable customers. So focus on major leagues, major markets, the main player props, rebounds, stuff like that, as well as the main leagues. WNBA, I do bet on the WNBA. But what we can do to kind of round out the stream is, are there any arbitrage bets? Honestly, we may have taken out the good ones. So right now there's no opportunities. There's no crossed markets. Again, the arbitrage tool, that's how I find most of my positive EV bets. Right now, there's no opportunities, so I'm not going to force a bet. Again, we got Rockies plus 250 earlier. But regardless, hopefully you enjoyed this video, and thanks so much for your time.